Welcome to Market Nerd, where seasoned analysts break down listed companies on the Philippine Stock Exchange. Don't forget to like, subscribe, and hit the bell to get the latest developments and investment ideas in the financial markets. Let's dive in.
You know, when you're checking your own finances, you look at your bank account, what you own, maybe what you owe, and you think, okay, is this good? Is this bad? Are things moving in the right direction?
Yeah, totally.
Well, today we're going to do that same kind of checkup, but on a much larger scale.
Wait,
We're diving deep into the financials of Manila Water, a company, that's essential to millions of people.
absolutely.
So this is a financial health check to figure out their story over the past few years using their balance sheets, income statements, and cash flow statements.
Yeah, we've got those for 2022 to 2024, so we can really see the major changes and get a good sense of where they stand now and what their future prospects might look like.
And we want to do this quickly but thoroughly, right?
Mhm.
We want to extract all the key points from these dense documents without overwhelming anyone.
Definitely.
And just so everyone's clear, all the numbers we'll be talking about are in Philippine pesos.
That's right, Europe.
So kicking things off, let's look at the balance sheet, kind of a snapshot of what they own and owe at a specific point in time. And the first thing that jumps out is the growth in total assets. At the end of 2024, their assets totaled 227,943,542,179. That's up from 209,687,401,717 at the end of 2023. So, their overall asset base is expanding.
Yeah, that's a good sign generally. But what's interesting is that within those assets, their current assets actually decreased.
Oh, really?
Yeah, went from about 16 billion in 2023 to about 13 billion in 2024.
So current assets, just to remind everyone, those are things a company can easily turn into cash within a year, like cash on hand or short-term investments, right?
Exactly. So it seems they have a little less in readily available funds.
Interesting. But you said their total assets grew. So if current assets shrunk, that must mean their non-current assets, the longer-term stuff, increased, right?
So you got it. And a big driver of that was their service concession assets net, which jumped from 162,217,498,951 in 23 to, get this, 184,257,498,551 in 24.
Wow. That's quite a jump. But what exactly are those service concession assets? It sounds kind of technical.
Well, it's all the long-term investments they make as part of their agreement to provide water and wastewater services.
Right.
So we're talking the cost of things like upgrading and maintaining the pipes and treatment facilities, the value of their water rights, the essential stuff they need to operate.
Ah, okay. Makes sense. The fundamental building blocks, really.
Exactly. And for all the nitty-gritty details, you can check out notes 10, 23, 24, and 75 in their reports.
Good to know. Now, I also noticed a small bump in property, plant and equipment, and software. Went from 9,108,755,273 to 9,512,197,127,000.
Probably.
Okay. But then there's this pretty big drop in their investments in associates. Went from about 11 billion down to about 7 billion. What happened there?
That's connected to something we'll see later in the income statement.
Oh.
Basically, they had to take an impairment loss on their investments in Eastwater and Saigon Water.
An impairment loss. That sounds kind of scary.
Not necessarily. It just means they had to acknowledge that the value of those investments had decreased, which can happen for various reasons, market conditions and such. Note 12 in the report goes into more detail if you're interested.
Right. Okay. So one thread connecting the balance sheet and the income statement. Good to keep in mind. A couple of other things caught my eye in the non-current assets. Goodwill, for instance, saw a pretty big jump from a tiny 6,247,010 to 6 Goro to a more substantial 146,377,351. I'm guessing note 4 has the details.
Yeah, note 4 confirms that's related to their acquisition of MWPBI.
MWPVI. I don't think I've heard of them.
It's not critical for this overview, but yeah, that big increase in goodwill usually points to an acquisition.
Okay. And goodwill, just to clarify, that's like the extra you pay for a company on top of the value of its assets, right? Like for their brand reputation or something.
You got it.
Okay. And lastly, there's an increase in other non-current assets from about 9 billion to about 10.7 billion.
Yeah, those other categories can be a bit of a mixed bag, but notes 13 and 29 probably have the breakdown.
So to sum up the asset side, it seems like they're investing more in their core water infrastructure, making some acquisitions, but have a little less cash on hand.
Yeah, that's a good summary.
Now let's look at the other side of the balance sheet. Liabilities, what the company owes to others. Their total liabilities also increased from 139,567,958,164 in 2023 to 150,608,512,977 in 2024. So more assets, but also more obligations.
Yeah, that's common when a company is growing.
Yeah.
And just like with assets, we see an increase in both their current liabilities, the short-term debts, and non-current liabilities, the long-term ones.
So even though their service concession assets grew, they might have also taken on more debt or have changes in other long-term obligations. To really understand that, we'd need to dive deeper into those specifics in the financial statements.
Right.
Moving on to equity, the owner's stake. That also increased from 70,119,443,553 to 77,335,029,202. What drove that growth?
Well, the biggest factor is usually retained earnings.
Right, the accumulated profits they haven't paid out as dividends.
Yeah, the schedule of reconciliation of retained earnings would give you the exact numbers. But we also need to look at any transactions they did with their own shares. Treasury shares, they're called.
Oh, yeah, like those buybacks they did from Ayala Corporation and the ones related to their stock incentive plan, the SIP, those definitely affect equity.
Yeah, the integrated report has more details on those buybacks. And then there's the increase in non-controlling interests from about 1.2 billion to 2.1 billion. That could be due to how their subsidiaries are performing or because of those acquisitions we talked about earlier where they might not own 100% of the company.
Okay, so we've got this picture emerging of a growing asset base, particularly in the long term, coupled with increased liabilities, but also a stronger equity position for the owners. That's the balance sheet snapshot. Now let's switch gears to the income statement, which shows us the company's financial performance over time. And here, the revenue numbers are pretty impressive, especially the revenue from contracts with customers.
Absolutely. The revenue from their core water and used water services saw a big jump. 28,503,979,253 in 23, all the way to 34,855,308,123 in 24. And if you go back to 2022, it was only the 20,640,724,233.
Yeah.
So you can see a clear upward trend.
Yeah, strong upward trajectory. But revenue's only half the story, right? What about costs and expenses?
Well, those did go up overall, as you might expect with more revenue. The cost of services increased, which makes sense if you're providing more services or if your input costs like chemicals or energy have gone up.
Right.
And there were increases in operating expenses too, like personnel costs and depreciation and amortization, the expense of using up those long-term assets over time.
I see. So higher costs, but hopefully the increase in revenue is outpacing that, right?
Well, that's what the bottom line will tell us. But before we get there, there's this item called other income expenses net that we should look at.
Oh, yeah, I remember seeing that. Anything significant stand out there?
Yeah, this is where we circle back to that decrease we saw in investments in associates on the balance sheet.
Right.
So in 2024, they had that impairment loss of 4,631 million on their investments in East Water and Saigon Water.
4,631 million. That's a lot.
It is a substantial charge.
So that definitely affected their overall income. What about their income tax situation? How did that play into their profitability?
Well, their income tax expense did change, but what's interesting is that their effective tax rate, the actual percentage of their pre-tax income they paid in taxes, actually went down from 34.59% in 23 to 27.37% in 24.
So a lower tax rate. That would have boosted their net income, right?
Exactly.
And speaking of the bottom line, the net income attributable to the owners for continuing operations saw a huge jump, going from 594,150,378 in 23 to a whopping 10,500,380,032 in 24. That's almost double.
Yeah, a really impressive increase, even with those higher costs and the impairment loss.
So strong revenue growth and a much more profitable year in 2024. Now let's get to the cash flow statement. This shows us the actual cash coming in and going out of the business, which can sometimes tell a different story than just looking at profit.
Right, because sometimes you can have a profit on paper, but not necessarily have the cash in hand.
Exactly. So what did the cash flow statement tell us?
Well, the net cash provided by, used in operating activity, basically the cash from their core business operations, that actually decreased significantly.
Oh, from what to what?
From 4,506,813,392 in 23 to 892,487,399 in 24.
Wow, that's a big drop, especially considering their net income doubled. Why would that be?
Well, it could be a number of things. Sometimes, Revenues and expenses are recorded at different times than when the cash actually moves.
Right.
And changes in working capital can have a big impact too. Working capital is like the short-term funds they need to run the business. Things like how fast they collect money from customers, their inventory levels, how quickly they pay suppliers, things like that.
Okay. So those timing differences and changes in working capital can cause discrepancies between profit and cash flow.
Exactly.
Now, what about net cash provided by used in investing activities? What did we see there?
There, we actually saw a big turnaround from a net cash outflow of $2,388,961,679 in 23 to a net inflow of $715,415,415,117 in 24.
Wow. So they went from using cash for investments to actually getting cash from investments. How did that happen?
A major factor was the proceeds from selling some of their subsidiaries, which brought in over $1 billion in 24.
Right. That was related to Ayala selling their stake to Trident Water, wasn't it?
Yep, the SEC 17A Part 2 has the details on that, but they also continued investing in property, plant, and equipment, so that was cash going out. And they also received some dividends and interest income, which added to the inflow.
Okay, so some big moving parts there. Finally, what about net cash used in financing activities?
Well, there's a cash outflow for both years, but it was smaller in 24 than in 23.
And remind me again what kind of activities fall under financing.
That's mainly about borrowing and repaying debt, paying dividends, and buying back their own shares, like those treasury share transactions we mentioned earlier.
Right.
The detailed cash flow statement would break it down.
Yeah.
But we know they had some of each of those things happening.
Okay, so a complex cash flow picture. Less cash from operations, a positive swing from investing because of those asset sales. And now let's shift gears and look at what the management themselves have highlighted as the key risks and opportunities for the company.
Okay.
First, the risks. What are they most worried about?
Well, a big one is the overall Philippine economic conditions.
Right. Like what specifically?
Inflation, interest rates, the exchange rate, all of that can affect both demand for their services and their operating costs.
Sure.
And, while they can adjust tariffs to some extent to recover costs, it might not be enough to cover everything if things get really bad.
So pretty typical risks for any business operating in the Philippines. What about risks that are more specific to Manila Water?
Well, they highlight contingent liabilities. Those are potential obligations that could arise in the future, often tied to legal stuff.
Oh, right, like lawsuits or regulatory issues.
Exactly. And they say the outcome of those is uncertain right now, so it's something to keep an eye on.
Okay. And speaking of regulatory issues, what did they say about that?
The regulatory landscape is definitely a big focus. They mentioned the implications of that Supreme Court ruling about the Clean Water Act, even though they paid the fines in 2023.
Right.
And then there's the Abacada Guro petition, which is questioning the legality of their concession agreements and the extensions.
That's a big deal, right? If those agreements are ruled invalid, it could really disrupt their business.
Exactly. And they also talk about the amended RCA, their regulatory control agreement, and how it affects their tariffs. It's a complex landscape they have to navigate.
I bet. No, we also talked about that big impairment loss on their investments. Do they see that as an ongoing risk?
Well, they specifically highlight the impairment of their investments in Eastwater and Saigon Water as a risk factor.
So their international ventures are a bit of a wild card.
Yeah, it seems so.
Hmm.
And finally, they briefly mentioned credit risk, the risk that their customers or others might not pay their bills.
Makes sense. Every business has to deal with that to some extent. Okay, so those are the key risks they've flagged. What about the other side, the opportunities? What are they excited about?
One key area is talent management and development. They're focusing on strengthening both leadership and technical expertise.
That's smart. You need good people to run a successful business. What specifically are they doing in that area?
They mentioned things like their GABE mentoring programs and the Manila Water University, also called LAAG, to develop their employees.
Okay. And what about opportunities for expansion?
Yeah, non-East Zone and international expansion is a big one.
So they're looking beyond their current service area.
Exactly. They have these programs, like their talent mobility program and localization program, to support expansion efforts.
Makes sense. They also seem to be embracing technology with their advanced water quality monitoring and the Manila Water app for customers.
Right. Even though they don't have a separate technology section, it's clear they're leveraging technology to improve operations and customer engagement.
Smart move. And of course, sustainability is a big topic these days. What are they doing in that area?
They're very much on board with sustainability.
Mm.
They talk about it as a long-term opportunity, aligning with the UN Sustainable Development Goals.
So it's not just about profits, it's about being a responsible company.
Exactly.
And they mentioned things like watershed management and nature-based solutions.
Yes.
Finally, with Ayala selling a big chunk of their stake, could that ownership change create new opportunities?
Potentially. With Trident Water now having more control, there could be new strategic directions, different priorities, maybe even new partnerships. It's something to watch.
Right. So lots of potential opportunities on the horizon. Now, for investors and anyone interested in the company's future, the big question is, did management provide any specific guidance on what they expect for future revenues and earnings?
Well, based on the reports we have, there isn't any explicit numerical forward guidance
Oh, okay. So no hard numbers or forecasts.
in these documents.
But can we infer anything from what they've said about their plans and opportunities?
Well, their focus on expansion, sustainability, and infrastructure development does suggest a potential for continued long-term growth.
Right.
And there's that approved FCDA for 2025, the foreign currency differential adjustment, which will adjust their tariffs upward. That should have a positive impact on revenues.
So while there are no specific figures, those things do point towards potential growth. Well, this has been a really fascinating look at Manila Water's financial journey over the past few years. We saw their long-term assets grow along with increases in liabilities and equity. Their income statement showed a big jump in both revenue and net income in 2024. The cash flow statement was a bit more complex, with less cash from operations but a positive swing from investing activities. And we explored the key risks and opportunities they're facing, as well as the lack of explicit forward guidance.
Yeah, it's been a great overview.
So, to wrap things up, here's a thought for you, our listener. Considering all of this, what do you think is the single most critical factor for Manila Water's continued success going forward? It's a complex question with no easy answer, and we encourage you to check out their full financial reports if you want to dig even deeper.
Yeah, there's a lot more detail in those reports.
And of course, stay tuned for more deep dives into the world of finance and the stories behind the numbers.
We'll be back.
Liked what you heard? Drop a comment, like, and share this episode. Hit subscribe and tap the notification bell. We've got more insightful market ideas coming your way. Catch you on the next one.